Hey, what's going on, family? It's your boy MC Fire coming at you again with another video. We're dropping some good news because we're taking every day we're taking a new step on our journey, and in that, one of the key things for us is making sure we stay really true to our objectives, true to ourselves, and true to the people that matter. So, in those three things, let's start with true to our objectives. The trading for the trading week, it was actually a kind of a dud. And let me explain why. I made an error on the previous week because I traded on Shabbat. So some people might not understand what Shabbat is, but not without going into too much details. You're not supposed to be buying or selling on Shabbat. So that Monday rolled into Shabbat, and I actually executed a butterfly trade on that day. So as a punishment to myself, because I stay true to myself, that to break that habit, there has to be repercussions. And the repercussions for me was, hey, this week you forfeited your opportunity to execute trades in the market. And that's what I did. So this last week, didn't take any trades, but it gave me a lot of time to reflect. So we're going to take a look at some of that reflection now. Not going to look at too much of the charts, but what we will look at is what I promised you guys prior trading performance. So again, this is a journal that was given to me by one of the mentors that we signed up for in the course. It is kind of interesting because this is how I calculate a step on the journey, right? A lot of times people will say they're on their journey, they're finding their truth. But if you're on a journey, right, you have to have mile markers. You have to know, hey, am I halfway there? Am I all the way there? Am I, like how far am I on the journey? Like what's my progress rate? On a trading journey, it's the number of trades you take, the number of good and bad trades you take. And for me, that's the number of 25. So after every 25 trades, you look back, you assess, you say, hey, what did I do right? What did I do wrong? What can we improve? So here, as you guys can see in our trading journey, total profit $700 or net profit loss is $777 of net profit. Net gains was 1,255. Net losses was 478. This is with the new system. So just to give you kind of some kind of background on what's going on here, we when we were switching to the new system, we also switched platforms. We switched from Robinhood to Thinkorswim. Charles Schwab and the software platform that you trade on is Thinkorswim. So really good news there. That's why I'll explain one of the trades here and why it went the way it went. It actually was positive, but we want to break that down. So what we have is a spreadsheet that basically breaks down your cumulative trades, one out of 100, and then each step on your journey, 1 of 25, 26 of 50, 51, 75, and 76 of 100, right? And it goes all the way to you basically get down to 500 trades, right? We want to make this a business. So with our new trading system, we're going to track it like a business. This is not just a hobby, right? No matter if you have $1 or you've got $1 trillion, treat each dollar like it needs to go out and work for you. It needs to go out and make a return. It's working for you. Okay. In that, we're going to go back to the main screen here. What we primarily traded was SPY at 0 DTE. A lot of these early ones that say SPY here, they were off of Robinhood. So when we were able to trade off of Thinkorswim, you'll notice that they started switching to XSP, which is the like micros, which is the smaller futures contracts for the SPY essentially. So in our SPY trades here, right, some of them were successful, some of them were not. Let's scroll over to kind of see how successful they kind of were, because some of them were like extremely successful and some of them were not. Not sure if you can see guys that. Okay, cool. And I want you guys to notice something. A lot of it is all or nothing. And what do I mean? Because of the new strategy, it's a butterfly strategy where primarily going out of the money, but it's asymmetric in nature. So if you lose a very small, very, very small portion of your capital. And if you win or your trade is successful, you get a very, very, very large portion of returns, or potential for large portions of return, if you manage the profits right. So you're not really worried about managing the portfolio as in loss. You're worried about managing it in profits. And that's really kind of keeping to your system, right? Follow your trading rules. As you see here, this trade number one, it was 100% loss. But trade number two, if you notice trade number two, the trade was entry cost $37, but the profit and loss was $67. Now you're just like, wait a minute, that's peanuts. But I want you to think, everything in trading is scalable. Everything in trading is scalable. So if you're able to lose $42 but gain on the next trade $181, right? You could do this all day. That's the beauty of it. Is most people understand is if you invest $1 and you're able to get $2, that's a business. That's freedom. That's real. Okay. The next trade was $46. Total loss $94. I think we took the 94 because we got one contract, but it was just large. It was 5 wide, and I picked closer to the in the money. And that brings me to a new point. In your trading rules, in your trading journey, right? What is your defined rule set? What's your defined, like, how do you say, okay, this is a quality setup with my edge? For us, that comes down to this over here, your total cap, right? So the trading account that the part of the trading account that we've allocated towards this new system is around $6,000. The total trading account is larger than that, but we only want to allocate $6,000 to test the new system, prove it, and then work forward. The rules are, that's your total cap for the trades. You are only at any given time going to be able to risk 10% of your capital, which is $600, and you divide that by 8. So your maximum risk per trade is only $75. Now, people will say, well, $75, that is peanuts. But if you risk $75 with the potential to make $400, that is a winning strategy that I think a lot of people will get really excited about. And that's the power of a butterfly spread, right? We'll break that down in a later video, but I just want today's video is talking about rules and setting your rules, setting up expectations in your rules, right? So the rules are, first you have to identify the trend. Is it up or down? We use the whole moving average, 14-day period whole moving average. Okay. I'll show you what that looks like actually on the chart here. So if you come on the chart, we're actually going to go to a daily chart here, and you'll see that it seems like there's a lot of lines, but bear with me. This line right here is basically like a trend tracker. And this trend tracker tells you, hey, the momentum on the whole is negative. The momentum on the whole is positive. What I recently found with the recent call to the mentor that we got a lifetime membership with, it was a different mentor this time. The gentleman said, if you look at the S&P, and I didn't remember the period of time he looks back, you look at the S&P from close to open has a 50% up and 50% down ratio. It's just when it's in an uptrend, the ups are a lot more powerful in magnitude than the downs. And that got me thinking, trading really is a coin flip. It could be up that day, it could be down the next day, 50-50. It's literally crazy. I think I might even actually break that. I should have thought to get that out for you guys, but on the next video I'll get that out for you guys to show you the distribution of up and down days that he has on the new journal that we're going to be using for the 0 DTE strategy. It is really, really something special. All right, so now that we have identified necessarily the trend, right? It's green whole moving average up. We are going to say, okay, ID the volatility, right? We don't want to overshoot or undershoot on our butterfly. So let's say if there's very low volatility on your VIX, you're not going to be able to catch a massive move, right? What it's basically saying, and if you don't know what the VIX is basically a measure of volatility. We'll type that in here and show you kind of what the VIX has been here recently. But as it stands right now, it just recently went up to 1733. But if you notice, it's been as low as 13. So that means the VIX, that means volatility in the market is very, very low. So in our rule book here, cooler markets are where the VIX is anywhere from 17 or less than 17. And we just today peaked over that 17, or yesterday and today peaked over that 17 mark. Okay. And that's been for a minute. So in hotter markets, though, the VIX is going to be anywhere from 32 or greater. So we kind of zoom out here, take a big picture. Yeah, when it starts to get up here, or up here, that's when the VIX is, the market's really, really moving. It's it could be up, down, maybe 3-5% on the day, right? So on those kind of markets, you're going to do a 30 to 50 wide butterfly. And on cooler markets, you're going to do a 10 to 20 wide butterfly, right? You want to cast the net in the right spot based off of volatility. Risk, we kind of went over that, but really the key takeaway here is 10% of the width of your butterfly. So if your butterfly is 10 wide, then your premium paid should not be anything more than $1. Let me say that again. If your butterfly is 10 wide, meaning you have from center strike to one of the outside edge, 10 wide butterfly, what you pay for the premium, for the pleasure of doing business is only $1, 10% of 10, right? And so on and so forth. And in the case of this trade here, as you'll see in the trade log, this trade was only 5 wide. So the most we should have paid for that trade is what? The most we should have paid is only 50 cents. We only should have paid 50 cents for this fly, but we paid 94 cents. So did we keep to our rules? No. Now, to be fair, I didn't know that was a rule, but once I learned the rule, we started trying to apply the rule. Okay, so as you see, the remainder of them are only basically less than whatever the width of the butterfly was. And that's good. We like that. Now, this trade right here is one of the trades that we closed and carried over from the old system. If you noticed, the entry date was 2/22. Entry price is $1 and $1.20, and we had 8 contracts. Okay, that basically netted us $960 for the entry. That's a very high risk for a potential loss. So, but the trade ended up working out very well. I'll kind of show you that because I really get geeked about this one. I think we executed our former mentor's trade very, very well. And kind of where we got the trade for XLE and how we executed it. So our trade actually was executed down here. This is the second 19, as you can see over here around it was actually executed on the 22nd. So around this area, right? That's why journaling is important. We executed on the 22nd on this week because it broke the high. It was above the 8-period moving average. It broke the high of the previous week. That's how he trades it. It is going into an uptrend. Unbalanced volume is green. So we decided to execute the trade. As it worked out, good execution, really nice follow through. It didn't reject, and it took off. It really took off, right? So we ended up here rolling some contracts, rolling some contracts, rolling, and then closing right here. The reason why we closed this contract, well, actually we closed, and then rolled, and then closed. So open, close, roll, and then close for the full contract. Now, why is that important that we close here? There's actually a lot more room to run. We wanted to actually leave that runner to run all the way to the, I think that, what is this, 2 standard or 3 standard deviations? Can't remember. I think this is 3 standard deviations. Yes, 3 standard deviations. Awesome. So yeah, we wanted to run at least till 3 standard deviations. This is a weekly chart. And it actually did that. So around this level is where we would be looking to roll it and hang on for more. And probably this week, if it didn't breach new highs, we probably would have closed it at, 3 standard, 3 ATR or whatever. average true range. So that trade worked out really, really nice. We even closed it early, but the plan was to not. Why did we close it? Well, we closed it because we were switching platforms and they recommended that you close the trade. So left a lot of money on the table here, like a lot. But as you can see, we netted out 98% return on investment, 98%. But to be able to do that, it was a lot more management, buying here, holding on for this, right? There was even a point where it was negative right here, but holding on, closing some when we got into pretty nice territory, closing some more, and then rolling and then closing. That took about 3 weeks. When you think about that, 3 weeks to get 98%, where with a new system and asymmetric, I look more at ratios and not total take home. If you're consistently able to get a decent profit of 100%, then would you rather get that in a day or 3 weeks? For me, I'd like to see us consistently get 100% return on investment every single day, if it's possible. So let's explore that here. We're gonna explore that. So there's some in parentheses. There's some not. Cool. So after that, right, you have some winners. There's a low winner, 10%, 14%, a lot of losers. But then you have a winner that's 142%, and another winner that's 272%. So as we start to get into a rhythm, the winners, because of their asymmetric in nature, can make up very quickly for a lot of the losers. This one, $36 down, but like literally the next day, you executed a trade for $29 and got a return of 237%. That is wild when you think about it. A lot of times people have a hard time fathoming being able to make that kind of return, percentage wise, right? Because unless you're holding contracts for 3, 4, 5 weeks, months, leaps, right? Getting those kind of returns over the course of a day is going to be really, really hard to kind of see that, unless you're like on the button, you're like an in-tune day trader, right? We're not the experts. We don't have the equipment to do high frequency trading, there's some programs out there that have a high win rate, but the risk to get the reward is just, there's better ways to skin this cat. So for us, staying true to our rules, especially for the trade listed out here, this guy, the $94, we now know how to properly execute that. And we also know, hey, don't trade on Shabbat, so you don't have to miss a week for sure. Also, today is my brother's birthday. So don't forget in all of your endeavors to remember the people that matter most. Call them, give them some love, let them know that they matter to you, because everyone says it, man. If you are on your deathbed, no one's going to ask you like how much money or do you regret not going in an extra hour? Do you regret not taking that trade? You're going to regret what? The relationships you don't have around you, the family you don't have around you. So it really does come back to, do you guys have a connection with the people around you in the real world, not in the world of business and not in this digital world we call trading? It is a good way. It is wealth creation, is important, but don't forget, even if you didn't have any of this, you would still, a lot of you have an opportunity to be with your family. So just remember that. This is your boy MC Fire. I appreciate you guys' time. If you guys like this video, tap into one of the previous videos we just rolled out about why a lot of people fail. And then also check out one of the videos that we got with Q in it. She absolutely has grown so much as a person. A lot of the editing is done by Q. So if you guys like the editing, definitely put that in the comments and say, hey, you're improving. Good stuff. Okay. We really appreciate you guys' time. Thanks for joining me, MC Fire. Have a good day, people, and goodbye. Peace.